Good evening. Can you all hear me?
Yes, loud and clear, Mr. Phua.
Okay, good. I wouldn't want to say that I'm very experienced because, in a sense, that what we have been experiencing and going through at this moment, I think it is definitely unprecedented. And of course, I wouldn't like to experience such thing again, I mean, in the future. But anyway, as I'm doing this presentation, I'm not sure how is the weather in Singapore, but in KL now, actually, we are likely to have a very heavy thunderstorm. So when the presentation is ongoing, sometimes you may hear the thunderstorm that can interrupt a little bit. I hope you can bear with me on that. So, I think at this moment, the world is exactly at a so-called inflection point to a certain extent that a number of the developed countries are seeing a decreasing number of patients being infected and start planning how to reopen the economy of the country activities again. Even like Malaysia, we probably, hopefully, we can reopen by after June 9, and I know Singapore also is planning on the 2nd of June onwards. And of course, I mean, throughout this period, one of the very so-called a little bit surprising to most of the people in the financial markets, not limited to people in the commodities market, is that in April, you see a negative price in the WTI. But actually, if you look into the history or what has happened in some of the commodities, in fact, negative price is not the first time. Although yes, it is the first time in the oil market, but if you look into it, which in this slide I enlarge a little bit, it has happened right in 2017 in the Germany Electricity Exchange, where they experience a number of negative prices throughout the few months, during the winter and then spring and also summer. Of course, the reason behind is slightly different because I think some of you know that in Germany, the so-called power producer are bidding to get their power into the grid, and whatever you have generated will go wasted if you don't put it on the grid. That's where sometimes you see this type of negative prices coming out. But on the other hand, as far as the WTI, it is a little bit difficult to presume that we will see another negative price again. Although I won't rule out that it will never happen, but at this moment, I would think that it is quite difficult to assume that we will see another negative price situation. And for those, I think you already know, one of the reasons is I would say that it's the ignorance of the naive speculators. I mean, besides, yes, the commonly known is the so-called storage capacity issue, but actually, if you look it into carefully, CME has already made a statement on April 8, which I think all of you should have already know, that they are looking into the possibility of a negative prices. And unfortunately, like I say, it's due to the ignorance, especially the investor in China that go into the structured products by the Bank of China, where they either totally unaware that they are facing a long squeeze because of the storage issue, and they didn't roll over when the contract is about to expire. That's where I think they totally get squeezed by the smart traders or smarter speculators. So in that context, that's the reason why I say I think that negative prices is unlikely to happen again. Again, this is on my standard scenario, which I will share with you, because we know that because of this coronavirus, until now, right, it seems that we know a little bit more about coronavirus, but at the same time, it also shows that there are still a lot of things that we don't know about coronavirus, which I will share with you later. But it is very clear that you can see that the storage capacity, especially at the cushion side, yes, because of the lockdown and all this, the demand has shrunk quite a lot, that it caused the storage utilization has gone up to almost as high as close to 85%. And this released data actually tells you that it has come off. But again, compared to the normal circumstances, right, you can see that it is still relatively at a high level. It's still relatively at a high level compared to like in February. So yes, there is some improving, but if you look at the US as a whole, it's still hovering at around 60%. So we wouldn't say that it has back to a normal time, but at least it's improving. And if we believe that the reopening of the economy can progress smoothly, then that's the reason why I think the likelihood of another negative prices, at least in the next 6 to 12 months, is unlikely to happen. And one of the major reasons that we are a little bit more positive on the economy, especially looking down 6 months down the road, one of the major reasons is that this crisis, if we relook back, this crisis is really very different from the crisis that has happened in the past. And it started off, actually, it is a so-called public health crisis, where out of a sudden, all the economic activities come to a stop. And then the financial market becomes more nervous and worried about the credit crunch. But if you look at this chart, it's very clear that it tells you that the spread between the US Treasury yields and BBB corporate bonds has come down, because for a while that the financial market is totally worried that this coronavirus crisis will trigger a financial crisis because of credit crunch and chain reaction of default. But at this moment, thanks to all the major central banks in the world taking relatively concerted effort to avoid a credit crunch, so essentially financial conditions, right, throughout this period and looking forward, we would have to say that it has improved and you are facing less risk on that. So the next things that all of us have to focus is actually how fast, right, once the economy reopen, how fast we can be back to the normal economic activities. Now, just as a comparison to some of the previous crises for the WTI prices, I mean, I'm taking WTI as a reference, although at this moment, Brent and even Dubai prices also more or less, they are moved quite in tandem with a certain spread. So if you look at what happens, you see there's one vertical line at around 118 days. This is how we count that, like in the SARS, it is where first the SARS is being reported and everybody start to get worried until it becomes a little bit of it's not really epidemic, but it getting serious. And then when the financial market hit the bottom, which is where the vertical line is about 118 days after the first SARS case. So we know that for the coronavirus, I use the word SARS 2.0 because if you go to WHO website, you can see that the official name actually is SARS CoV 2.0. So actually it's a SARS 2.0. From late January onwards, initially we expect it to also hit the bottom at around middle of April, which actually the number of infections globally has hit so-called the increment on a daily basis has hit the peak during that period, but now it starts to increase again, which of course it carries the risk looking forward. But interestingly, actually this round, because of all the concerted effort by central banks, as what I've mentioned just now, where the financial conditions has improved, not only just WTI, but actually you look at all the global equity markets, they are more or less hit the bottom faster than what it used to be in the past. And of course, this period of time, you know that there's also a Russian issue of the not agreed initially on the supply, but you can see that the chart actually is quite similar, right, between the SARS 2.0 and the SARS, right, where it will hit the bottom. And whether there is a second bottom or not, it really depends on which scenario you are taking, right? Of course, I will share with you our scenario, but at this moment, it looks like it has already hit the bottom. And if there's no second bottom, it's not a double bottom, then it will start to gradually recover to the normal, which we think that should be around 30 to 35 US dollar per barrel range over the next, or over the second half of this year. Now, so the key is that with a number of countries are already either already open or is gradually reopening the economy. So the question is that, will there be a second wave, right? Or when will this either you call it SARS 2.0 or the COVID-19 will becomes to an end that it is no more a big risk to the society, to the world economy. So there's three possible scenarios. Scenario one, it will be more of a U-shaped recovery where the second, third wave is also relatively quite strong in the sense that you still see a larger number of people being infected. Definitely is going to hurt the economy a lot. But I will put this probability is only 10% because I think the world, right, all the government is more prepared, right, with the second wave. But on the other hand, like I say, you know, there are still a lot of unknowns on this coronavirus, right? Especially like the yesterday and today news is talking about actually the coronavirus does infect, or you want to use the word reside also is okay, in a number of animals, where these animals will have no symptom, but from there it can transmit to human. So that is where is still some unknown of whether, you know, the SARS, this coronavirus will be like together with us into the future. And then the other scenario too is that the second wave probably either due to mutation. In fact, now you already see more than 7,000 different strains of this coronavirus, but so far it has not become to a very toxic type of virus yet. But if assuming that it mutate and becomes more so-called stronger than what we see, then the second wave can be very bad. And one of the example, which currently there's no scientific evidence to say that it is because of the mutation, but this chart to your right actually is Iran. Iran, you can see that actually they see that peak, and then because of the US sanction, right, they need to revive the economy in order to be politically stable domestically. They reopened it in April. And after where you can see I put a star there, then after the reopening, yes, I mean the number of new infected cases come down, but after then, since May this month, it has started to pick up again. So it's a clear sign that actually Iran is experiencing a more serious second wave. So whether the rest of the world will follow this pattern or not, it is a big question mark, especially even like US, they have reopened, and you see cases in Texas actually is increasing. So this, I would put a possibility of 30%. And this one, I will call it, I wouldn't say it will be a V-shaped recovery, W-shaped recovery. It will be a V, and then after that it becomes an L. Because if you open the economy too fast, like Iran, and then the second wave become too serious, then after that, you will be much more cautious, and in fact, the damage on your economy can be even worse. So for it to recover later will take even a longer time. This is what I call a VL-shaped type of recovery, which I think the probability will be about 30%. The last scenario is that the second wave, or I mean in the chart, it may seem like a third wave, right? It will be gradually the peak will become smaller and smaller. And like what I mean, this include a wishful thinking, right? This really include wishful thinking that by end of summer, right, when the next winter, autumn, winter comes, presumably that this virus become weaker during summertime, and when autumn, winter come, it becomes more or less like a common flu, that it becomes less serious. But we don't know. Like say, when I put this 60%, it includes a wishful thinking. After all, I mean, I'm not a biomedical researcher that able to tell you with certainty that don't have to worry or whatsoever. But looking at the biomedical space where everybody trying to look for vaccine or trying to look for existing medicine to see whether it's effective to cure the patients, or trying to develop new patients. So, like say, with some wishful thinking that human wisdom were able to help us to overcome this, where the situation will become less serious, just become like a normal flu after this reopening of the economy. So what I'm going to share with you from now onwards, essentially it's based on this scenario 3, which is the 60% chances that we see a little bit of, although V actually is too, actually it's not really V. I would say it's more of a square root shape of recovery. That means that you hit the bottom, you recover, but to go back to the pre-coronavirus situation, it will still take time. It may take 3 to even 18 months, right? It really takes time, but at least you see a relatively immediate, a little bit strong recovery. But from there, it will become a much slower recovery before it can go back to where before the coronavirus. Now, like I say, there are plenty of hopes. That's where I put my 60%. And one thing, I think the world has learned one thing. In the reopening of the economy, and also if there is a second wave, that's where the world is better prepared. That's where I put my wishful thinking of 60%, is because you see a more and more test method trying to capture the situation. Because at the very beginning, we know that most of the countries are taking the PCR method, which take a longer times before you know whether you are infected or not. And in between, you may have already infected other people. So now you have the antigen method, right, to so-called screen out the positive patients that will go for further PCR to ensure that they are infected. And then once this test method told you that you indicate that you tested positive, they can start to do the quarantine, and therefore to reduce the so-called cluster and speed of spreading away. And whereas the antibody testing, right, will tell an area, a city, or a country how soon they can reopen the economy. This is what New York City is doing. Technically, if you have antibody, it means that you has already been infected in the past and you're already all right. So this is exactly what Boris Johnson has talked about, the so-called herd immunity. So with this kind of method, better testing methodology, I think the world is getting more confidence to reopen the economy, right? And on top of that, of course, there are various medicine that everybody is trying out. Of course, now the focus is exactly on the remdesivir, and then Evigan, a little bit question mark, but you do have some other new, not new medicine, existing medicine that they are trying to see how effective it can be in treating the coronavirus patient. And of course, we know the hydrochloroquine is not really effective. So looking forward, like say, with this 60% scenario that even with a second wave, third wave, or whatever, the magnitude will become smaller and smaller, damping away, ultimately becomes more or less like a normal common flu. And with the countries have a better understanding of the testing method and also how to tackle patients so that they won't walk around to infect others. So looking forward, I mean, for the oil price movement, right, it actually depends on these few key drivers, right? How OPEC plus, right, is going to manage the supply demand, or rather to say how to balance the supply demand, right? At this moment, of course, it's because of 2 week demand that has forced them to really cut their production. But there is some question mark on what if economies start to recover, will we see a sudden influx of excess supply or not? Though at this moment, I would think that this situation, probably OPEC Plus, may have learned the lesson. They will be more cautious. If anything, when you see a massive excess supply over demand, probably will be in the year 2021, probably even second half. So it's not a big issue that will affect the oil price over the next second half of this year. As far as storage capacity, I think so long as demand start to pick up and then the supply is still under control, it shouldn't be an issue. And then, of course, capex at this moment, I don't think everybody will anticipate that the oil giants will start to resume the capex and start to increase the oil wells and all this. And then the policy responses, technically, this is more on the reopening of the economy. So this, again, like I say, is based on WTI. You can see that, first quarter, second quarter, we really see excess supply. That's the reason why the oil price collapsed. But of course, this one is because taking a monthly basis. That's why you don't see a negative drop there, but you can see that it really dropped. And based on the EIA forecast, which I think all of you definitely is following the EIA OPEC reports and also the IEA reports. So I think it is very, they form a general common view that in the second half of this year, the supply demand will be tight. Of course, based on the forecast, it will be more towards the deficit side. But definitely, I think you'll see a tight supply demand, which definitely is a positive factor for the oil price, right? These are the supply side issue. And again, this one, of course, is more towards the Brent's oil prices, and which I know all of you definitely is following. And the issue is that the global floating storage is still at a high level. Presumably, once these reopening start to resume and Asia demand becomes stronger, it will start to come off, right? These are the supply side. You can ignore the WTI prices because there is not really to tell you how they are correlated. Of course, when oil price come down, a number of oil rigs in US will start to close down. And in fact, you look at the rig count now, actually is quite towards the historical low. So at least it brings back to the supply demand equation that the excess supply concern at this moment is behind us. Now, so with the reopening of the economy, how strong on the demand side it will be, right? Then it really depends on how some of the key countries reopen the economy and how fast it will start to resume. Like I say, I don't expect it to be back to the pre-coronavirus level, but at least close to 80% of the pre-coronavirus level of activity. So again, the key country we know actually is G7. I mean, these are the big consumer of the crude oil, right? Essentially, is US, I mean, the G7, then plus China accounts almost 47% of the global demand. And exactly, if this G7 plus China cannot recover the economy fast, it will definitely have an impact on the supply, on the demand side. You may ask why the rest of the world, which is for 53%, are not significant, which I will share with you later also, because it is very clear that the rest of the world economy actually are linked to this G7 plus China economy activity as well. So the key will be now, China, we know that yes, it has already, technically we can say it come out from the coronavirus already, although there's still some concern on the second wave. And then now US and the major countries like Germany and all this also start to reopen economy. So if that being the case, we can expect that at least demand will start to pick up, although may not be strongly. But having said that, we also have to look at even opening of the economy immediately doesn't mean that the demand will shoot up immediately, because if we look at the demand, right, again, this statistic is only on the OECD countries, but it also shows you that actually most of the crude oil, the end demand or the end user ultimately actually go to the road transportation. Then you can see those roughly all in the blue color, right? It's road, aviation, and then railroad or domestic waterways. All these add up, actually, you can see that it's close to slightly less than 65%. So if logistic does not come back, even the country open up the economy, but there's still still a lot of restriction on the movement, and the logistic does not pick up, then the demand for the oil will not be that strong. So the question is, how soon and will they, really pick up, right? Like say, if you look into it, the world now is exactly, if you look at 2000, in the year 2000, right, the world trade actually is like, technically a little bit independent. You see the Europe bloc, right, mainly the trade is between the European countries and Germany. So long as this bloc, are able to reopen the economy, assuming if it's in 2000, right, it can be irrelevant of Asia side and the US side. But now, although it's still a little bit old data, this is 2017, 2017, you can see that, you know, the world is really interrelated, or is really so-called linked to each other, right? You have the main countries of Germany, China, and America, right? And they are interlinked in terms of the trades. That's why people have been talking about the supply chain issue that will affect the economic activities. So at this moment, we know that China start to able to gradually, improving the economy. So Germany and Europe bloc also start to improve. So long as US also start to improve with not significant serious second wave, that's why then the world economy will have a better, brighter prospect. And you can see also it's very clear if you look at the stringency index, which means that how the government responds to this coronavirus, including lockdown and some other quarantine and other medical services, right? The more stringent a country it is, you can see that the economic activity actually has dropped a lot. You can see that like Germany, Italy, France, where the stringency index is close to 95 and above, right? The PMI on the average last 4 months actually dropped significantly. Whereas China, right, in April, I mean, they already reopened the economy. That's why PMI start to pick back. And interestingly, if you look at the as of May 11, compared to the PMI, actually some countries' stringency has increased a little bit. It is a little bit surprising to see US stringency increase. This probably is due to the testing, but it does tell you that there is a direct correlation that once the government start to reopen or the stringency start to reduce, then actually economic activities will start to resume, which we can expect over the next 1-2 months, right? And you look at US, right? The trend is very clear. You can see that all those SME, SMI, the local businesses that start to open, right? You can see that the red line, you can see the trend actually start to moving up. And of course, employees working and all this also on the uptrend, although it's a it's a slow trend, but this will tell you economic activity start to back to normal. Into the next 1-2 months, you'll see more people being employed. So there's more consumer spending. So economy will shift into the more so-called forward gear, right? And interestingly, right, this is one indicator that you may want to keep an eye on too. Maybe it may not be for day-to-day trading type, but to identify the trend of how the crude oil prices will behave. You can see that the crude oil price movement actually is highly correlated with the G7 countries' mobility, right? You can see that is very, very clear. And you look at the US also, right, with WTI also is very clear, right? It moved in tandem. Now, with all these, like say, start the opening of the economy, and you see that in US, small businesses start to reopen. That's why you see that the consumption on the petrol in US actually has hit the bottom, right? And start to recover, although the latest announced data, which is up to 15 May, show a slightly drop, but the trend, I think it won't change. It will be still more on an uptrend. And whether it will back to the pre-coronavirus crisis situation is still up to be seen. I wouldn't think that it will be back so soon. Again, some people are still very cautious. They're not to be moved around too much. So, but it's a clear sign that at least the consumption start to increase, right? Like I say, I wouldn't be so positive to assume that it will be back immediately, because if you look at China, this is where the China congestion index, right? You look at the congestion index, right? It has dropped. Then after that, it has recovered. But when you look at recover, it's still just hovering on the year-on-year basis, right? It's just about 5% increase on a year-on-year basis for the so-called tier 1 cities. If you look at the 100 cities in China, actually it's still flat, right? People still remain a little bit cautious to be all the way back to the normal life. So this is what I'm saying, that oil price, right? You can't expect a very strong upward momentum from now onwards. But on the other hand, also I don't expect the oil price to collapse, right? Once the economy start to reopen, based on our scenario that you don't see a serious, stronger second wave. Right? Now, another thing that, of course, beside the normal activities, as we have seen that transportation, especially the road transportation, including logistics and cars, right, accounts for a big chunk of the crude oil ultimate consumption, right? But the auto sales, again, I don't think we can expect that strong rebound on the auto sales, because if you look at China, the trend, yes, of course, it hit the bottom, then it rebounded, but you can see that over the last 2-3 years is a little bit on the downtrend. So this will not recover so soon, because, like I say, the business activity is difficult to expect it to rebound to pre-corona crisis level within the next 6 months, right? Similarly, another country that a lot of high expectation, which is India, also you don't see that the auto sales is likely to go back to the high level or close to the peak, right? It also has been on a downtrend, for the last 2 years. So even rebound, also it won't be back to the high level where you can expect more cars, therefore more petrol consumption. So what it means is that after the coronavirus, we are entering into a whole new world, right? Technology will be the key driver. So there will be a lot of working from home with IoT and all this, which means that actually the demand for power may not be so much change, because whether you work from office or you work from home, whether with a factory with more labor or with IoT, the power consumption shouldn't vary so much, right? Until and unless where the so-called environmental issue pops in. But the one that may change a lot on the so-called crude oil or the energy consumption actually is the review of the supply chain and the strategic goods, that is the reshoring, bringing the industry back to their home country or even nearer to the country where they are, because this will change, especially the marine logistic. Okay, so if we look into that, like I say, with the scenario 3, I would expect WTI prices to hover between 30 to 35, for the rest of the year. But we have 2 immediate risks that may create a lot of volatilities in the market. First is, of course, Argentina default. Will it default, right? Over the next 2 days. Actually, it's tomorrow, right? Of course, it looks like BlackRock now becomes more agreeable, or rather to say, has softened their stance towards Argentina haircut proposal, but we will never know, you know. And what does Argentina default means? It may means that it create, you know, contingent effect onto the emerging countries, which further hurt, right, the economy and even create a financial crisis within emerging countries that ultimately, of course, will hurt the oil market as well. Then another one, trade war. But this trade war, frankly speaking, it can give volatility to the market. But I'm not sure how serious Donald Trump is on the trade war. The reason is, you know, whether he's just planning for his re-election. He talks a lot, he tweets a lot, and in return, China also, because tomorrow is the NPC, so they also have to show a very tough position. So this may create some uncomfortability to the market participants. But are they serious? For me, I think that at this moment it's not until the presidential election is over. The reason is one. I mean, the most recent one we heard about, you know, US is banning, you know, selling of the components or whatsoever to Huawei. But the fact is, if you look at it, even before this Donald Trump talked about all this, US components, you know, as a percentage in the Huawei handphone, actually it's only 1%. It's a no big deal. So technically he can talk, he can create some volatility in the market, but actually this doesn't really impact US-China trade that much. And another is, at this moment, can US afford a trade war? You know, assuming that if China revenge, because we know that 97% of the antibiotics that is sold in US actually is come from China. And of course, you have a number of others like ibuprofen, hydrocortisone. I mean, some of these are essentially steroid or painkiller and all these. So with coronavirus still, you know, not comes to an end yet, and I don't think Donald Trump is going to be serious on the trade war. So it may create some volatility, but I don't think there will be a trade war that will affect the economy when we are just start to reopen it, right? Now, but the key part is, I think this is something that for you all in the oil market that you may want to think a little bit over a longer term, is that the change, the supply chain, the review of the supply chain from just in time, from minimizing costs to just in case and to resilience. So what it means is that, like say, either more will go back to their home country or surrounding, right? With a production base nearby the country, like in US, probably it's like Mexico or Canada, right? For Europe, of course, within the continental Europe. So what does that mean? It will means that you will see probably less long-haul marine logistics where components come from every part of the world, right? Shipped to China, assemble, and then ship out again to US or where the consumption is. And this also have an implication of ultimately the spread between WTI, Brent, and even Dubai. Because let's say if a lot of countries, a lot of companies or factories shifted to US, right? We even see TSMC talking about setting up their factory in this Arizona. So which means that there will be more demand, right, in terms of energy within US. So, I mean, compared to when your factory is in Asia part of it, then probably you see more demand probably on the Brent, on the Dubai. But now the demand actually will be more towards WTI. So it may change the spread between these different crude oil, right? Of course, having said that, oil is still important. I mean, it's still a big chunk of the major energy. And when we talk about environmental friendly and all this, that probably will be more impact on the brand side because European is more cautious on environmental issue. And if Donald Trump get re-elected, I think he is not that concerned, right? So that will reduce the demand on the renewable energy, especially in the US side, right? So in that sense, I mean, even we look into our crude palm oil, CPO. So we don't expect, other than the normal supply demand on the edible side and some of the industrial side, we don't expect that the biodiesel will be a strong factor at this moment to drive the CPO price, right? And the spread, like say, when companies start to review their supply chain, so it may come to the point that the spread that in the past used to be the norm may start to change. And this is where, for those who are trading on spread and all this, you may want to do some further study on that. Like say, it wouldn't be tomorrow that all the factories are shifting back to US or shifting back to Europe, but it will take another few months. But it is likely to happen because what in the past that the trade war didn't really enable or to force some of the company to shift their production back to US, but this coronavirus probably will fasten their decision to shift it back to US over the next, I would say over the next 12 months. Okay, so the last one is, of course, like I say, we are looking at the positive scenario, but there are still black swan that we need to be a little bit alert. I mean, we will never know whether it will happen or not, but these are the likely black swan event if it really happen. One is the US presidential election. When I say US presidential election, I'm not talking of whether Biden win or Donald Trump wins. I'm talking about, I mean, so far what we know is that this coronavirus, right, normally, it will cause people of age 70 into a very high risk that they may go into a very critical situation or even lost their life. And we know that both Joe Biden and Donald Trump are above 70. So the question is, what if two of them, quote unquote, are gone even before the presidential election, right? Because of the second wave or third wave. Then US will be in a chaotic constitutional crisis and it can derail the whole world economy, right? Another one is East Asia. East Asia is exactly, it depends on the MPC tomorrow and how strong is Xi Jinping controlling China. Because if his position is threatened, he may divert, right, the attention into external, that means create a lot of tension on the South China Sea, even including Taiwan. That also, will totally derail my optimistic view of the reopening of the economy. Over the next 3 to 6 months, we are back to about 80% of what we were before the coronavirus, where the WTI prices should be around
All right. Thank you so much, Mr. Phua. I think we missed a little bit of what you were trying to say towards the end. Can I trouble you just test your microphone right now before we go into the Q&A?
Yes.
As usual for the Q&A session, loud and clear, Mr. Phua. All right. So as usual for the Q&A, if you have any questions for Mr. Phua Lee Kerk, we have him only for today. By special request, we could have him again in the coming weeks. But in the meantime, please send your questions into the question box. And if there are no questions, actually, we've got a couple coming in right away. Let me see. All right, Mr. Phua, what are your thoughts about trading? What are your thoughts for trading the WTI oil, strategies that you employ, and what is the view for the market and commodities if Donald Trump were to lose the election? This is from Lydia.
Okay, first I have to apologize that at the very beginning, I didn't mention that first I'm not a trader, so I can't advise on the trading strategy because I don't trade, right? So, I mean, all I can say is that, of course, when you trade, you have different strategy, you look at different factors. So what I'm sharing with you is that these are how I see that these are some factors that may affect the oil price, either on a little longer term or on a short term, because you know sometimes market can look forward very fast and reflect things inside, right? So now, if Donald Trump to win, what will happen to commodities market? First is that I think as far as WTI, like I have shared with you all, I think the coronavirus plus Donald Trump will accelerate, right, the reshoring back to America. So WTI may be at a stronger movement than either Brent or even Dubai. Now, as far as the base metal, essentially, again, when companies start to do some reshoring, certain part of it needs some infrastructure building. Of course, that will be positive. But then again, like I say, it is a little bit zero-sum game, right? Because let's say if factories move to India, move to Vietnam, I think you expect more infrastructure building. You expect a stronger commodity prices, let's say on copper because of electricity grid, you know. But when it moves to US, that will be much weaker. So again, I mean, for those who trade on that, that's why I say you have to keep an eye. And of course, the immediate one, I think all of you know, keep an eye on the MPC in China, right? Whether after that they are start going all out for the infrastructure building again, especially on the west side of the China, right? Of course, if there is a reshoring that's ongoing, I mean, short term, let me put it this way, in short term, when economy reopen, you can't shift your factory so fast, you can't do your reshoring, you can't re-strategize your supply chain, right? Demand will pick up, whether like in China, right? The demand for coal prices may go up because they need more coal for energy. They also need, I mean, compared to pre-coronavirus, right? So they will need also crude oil and all this, that it will be good. Then after that, especially after Donald Trump is re-elected, technically, I would say that if all this reshoring, right, re-strategizing the supply chain, right, you will see weakness probably in the coal. I mean, those that in the past used to be consumed by China will see some weaknesses, right? That will shift towards US or towards Europe. Now, in terms of agriculture, frankly speaking, at this moment, post-election, let's say Donald Trump is to win and China and US totally break off, right? That means it's really going back to protectionism. China will not buy the agricultural products from the US, then of course it's going to be very bad. Whereas in the short term, frankly speaking, I have no idea. I have to admit that I have no idea. But I do think that, or rather to say, I suspect that because of a 1-2 months of lockdown, I think everybody knows. I mean, China air getting clearer, India also less smoke in the city like New Delhi and all this. Put it another way is that some of the pollution issue is being improved, and whether that would change, right? That would change the weather, because with that, the westerly currents that is on the northern hemisphere, whether it would change its pattern of flow, then it would change the number of hurricanes, the number of typhoon or cyclone that will affect all the crop productions, right? So, like say this one, at this moment, I have no idea. For those who trade, I think you better keep an eye on how the weather is changing in the current situation, because this year is a little bit odd. I mean, frankly speaking, in the month of May, in Asia side, you only see one typhoon, start moving north, and then in US, you only see 2 hurricanes that's coming up. So it's a much less than what it used around this period of time. So whether is it because of coronavirus, the pollution improved, so it affect the weather. At this moment, I have no idea. I also trying to figure it out, but I don't have any data and statistic that I'm able to so-called at least find out and come up with some conclusion on that. Okay.
All right, Mr. Phua, our next question, we've discussed on gold. So based on what's happening in right now globally, should we invest in gold? Can you explain on recent gold market developments and its whether it's acting as a safe haven in this crisis?
Okay. I mean, if we are talking about investment, right? If we are talking about investment, it's always good to have about between 2 to 5% in your portfolio to put the money in gold. But whether the trend of gold will it continue to go up, or is it going to come off? First is that, let me put it this way. At this moment, if we look into it, I do have the slide. Let me share with you. I believe I have the slide. Oh no, I didn't bring in the slide. Okay. Essentially, at the very beginning, we know that the gold prices shot up a little bit, getting stronger. But before that, also it comes down. I mean, in time of when the crisis, the totally unprepared crisis hit people, all the asset classes will fall, right, including gold. It weakened a little bit. Then after that, people start worrying before the central bank take action. That's where people worry about whether it will trigger into a financial crisis. That's where people run for the safe haven into gold, right? And at this moment, like I say, the market is still very split. Essentially, those who are taking an optimistic scenario that reopening of the economy, everything will be at least back to 80% of the pre-crisis level, then gold may not that attractive to them. But if you are on the other side of the scenario, you believe that there will be a stronger second wave coming in, and frankly speaking, after that, how the government and central bank in the world going to avoid a so-called liability crisis is a very big issue, right? Both liability, that means people who can't pay the loan because activities come to a stall. You have no revenue, you have no income, right? So if that situation, it will trigger a financial crisis, financial system crisis, then gold prices will definitely go up, because during this type of situation, people don't believe in fiat money. So if you ask me, if I base on my scenario now, I take 60% chance that you are not likely to see the second wave, third wave will not be that significant. then I think gold prices at this moment is more or less quite toppish already. But if you are taking the scenario of my first scenario, which is I put it 10% chance on the U-shaped recovery, or second scenario, 30% chance, then there is still upside for gold.
All right, Mr. Phua, I'm combining two questions here. Do you see rig companies and oil major companies getting into financial trouble? Also, can you explain the possible scenarios for the US shale industry, whether they can survive the current WTI price when it's below shale industry's break-even of like $40 and $50?
Okay, I mean, essentially, this coronavirus also tell you the survival of the fittest, right? No doubt. I mean, if you look at the rig counts, you know that a lot of them actually has at least temporarily stopped or closed it down, right? And if the economy start to recover, demand start to pick up, which is my scenario, of course, you will have the weakest one probably will be out of business, but the stronger one, where they are able to get financing, right? At this moment, technically, it's almost zero interest financing, right? So that gives them the opportunity. I mean, again, it depends on some companies how they look at the whole oil industry, whether including shale oil industry or shale gas industry, that if they see that there is a chance for them to enjoy some economy of scale, they may start take over some of those collapsed company at a fire sale price. But then ultimately, of course, it goes back to the supply demand, right? So long as, like say, based on my scenario, where there's some more reshoring coming back, there will be more demand on energy within US, then those who are able to take over those who already collapsed and cannot survive, and then with the demand becomes better, then I think they were able to enjoy a certain good profit out of it.
All right, so the third question is going to be a two-parter as well. Will all this liquidity from central banks assisted by the US Fed, will the US dollar depreciate? What does it mean for these economies moving forward, especially in relation to inflation?
Well, I mean, at this moment, actually, every country's, I mean, using the layman term, right, quote and quote, are printing money, right? So in a relative situation, US dollar won't depreciate so much, right? That is the key part. And especially when the economy start to recover, people need American to spend to support your export economy, right? Especially for Asian countries. So in that context, there is a certain supporting factor for US dollar. Now, the question is that if China come back much stronger and becomes a consumer economy, which it is not at this moment, then of course the US dollar will lose its influence. But if you ask me, my view is this is not likely to happen in the near future. For the major reason is that China also seen that the demographic, right, is changing, right? They have fewer people going into the workforce. Of course, you can say the US also not that many, but they are relatively all right. So in terms of consumption power and ability on a per capita basis, it's still a long way for China to catch up, especially if you agree with my scenario that there will be more reshoring. What it means is that China economy activities also will get affected, right? Because part of your export may diminish. So your GDP per capita is very difficult to increase at a very high pace. Whereas on the other hand, if there's a reshoring, although a lot of it will be automated, it does still create jobs in US, and US GDP per capita may improve. So in that context, it also tells you that to a certain extent, US dollar in over the next 6 to 18 months will be, I mean, without Donald Trump saying that he wants a weaker dollar or whatsoever, relatively, it should be relatively stronger or having a premium with relative to other currencies.
All right, thank you so much, Mr. Phua, and thank you so much for being a wonderful audience. We have recorded this session, so we will send you the link to the recording in our follow-up email. Meanwhile, for those questions we have not answered, we'll try and get in touch with you through email. Once again, thank you, Mr. Phua, and thank you for being a wonderful audience. Have a good night, everybody.
Have a nice evening and stay safe.